Many traders have asked me what is the best time frame for trading and which is my favorite time frame for taking an entry. Hello traders, so today we're going to talk about how can we utilize different time frames on trading. Depend on you are a scalper, intraday traders or a swing trader. So without much talking, let's jump into the chart. So first thing first, you want to know that what is your characteristics as a trader. Many of the traders out there, they didn't even find out their own characteristics before they start trading. So are you suitable to become a scalper? Are you suitable to become an intraday trader or a swing trader? It all depends on your characteristics. So what is the most easiest way to find out? That is how long that you can actually hold a trade. Now, it's not wrong to actually hold a trade in a short amount of time or holding a trade in a longer period of time. So it all really depends on which type of trader you are. So for the typical scalper, I would say that trade is hold within an hour or sometime a little bit over, right? So the trade is not hold for a long period of time. It can be even within a 15 minutes time if the trade already hit take profit. So scalper, normally they hold their trades within an hour and not really in a long period of time. Intraday trader, they are holding a trade within a day. So they will actually trade within a day and the trade must be closed before the markets close. So this is a typical intraday trader, which means that they are holding a trade within a day. So lastly, for swing trader, they're usually gonna hold the trades over days or over weeks or even months, right? They are holding a trade longer than a scalper and an intraday trader here. So from this information right here, how can you actually determine the time frame you use for entry? Basically, you can actually look into the time that you actually hold into a trade. So let's say for a scalper, within an hour divide by 4, you can look into 5 or 15 minutes for entry. So intraday trader, they are holding within 24 hours. So it can be looking for entry around 4-hour or 1-hour time frame. For swing trader, if you are holding the trades over the days or weeks, you can look into the higher time frame like daily time frame or 4-hour time frame for a swing trade. So I'm personally not really a swing trader, so not much comment. If there is any swing trader in this video, feel free to comment down what is your favorite time frame for entry. Now move on to how I actually use different time frames right here. For me, the higher time frame, I'm gonna use it for analysis, and the lower time frame, I'm gonna use it on entry. So let's break it down. So before I start trading, I will jump into daily or weekly time frame to do my analysis to find out what is the daily bias or the overall trend that the price is heading. So what I'm gonna do as usual, I'm gonna pull out a Fibonacci level from the top to the bottom to see that where is the price sitting at in terms of the Fibonacci level. So here we can see is rejecting from 0.5 Fib level. So 0.5 Fib level is a strong Fibonacci level to hold the price back along if the momentum is also bearish. If you're interested to find out more about Fibonacci retracement after the video end, you can actually find out on the channel. On this instant, for my daily bias, it will be bearish for me as we have a strong bearish candlestick closures on daily point of view and we are respecting 0. High chance for the price to actually turning bearish back to the previous few level. Now, after I'm using the daily time frame, I will move on to 4-hour and 1-hour time frame to mark another key levels for me to see where's the support and resistance. So go on to 4 hours, I can see that the next key level and the potential price heading to is gonna be on the low side. And if the price were to break the high, it can be retesting somewhere right here. Now, after all the analysis is done, then I will finally move on to smaller time frame on a specific time, right? On a specific sessions that I trade every day to collect data. So let's move on to smaller time frame. So when we move on to lower time frame, 30 minute, 15 minute, 5 minute, we can see more details of the chart showing. So right here, I can clearly see a potential break and retest with strong bearish momentums heading towards the downside, right? And also we have these rejections on 0.5 pip level as daily shown. So now I'll even move into smaller time frame like 15 minute or 5 minute to see if there's a confirmation right here for me to take a shot. Now, as 15 minutes shows a strong bearish candle formations, now this is where I'm trying to take a short positions right here, alright, with the pullback. So that's where I might be taking a potential trade, managing my stop loss within my risk and see if this gonna be heading down towards another key level or give you a good risk reward. So as you can see, price eventually did drop it. I might be securing most of my trade right here instead of holding it full as a scalper if I'm trading during the New York sessions. But let's say if I'm trading on intraday basis, I will actually let my trade run without setting my stop loss to break even so that it can potentially hitting a bigger risk reward. And if you move into 5 minute time frame, you can even look closer to what is happening on the price in terms of the 5 minute time frame. You can see that the price already start showing sign right here, and we can actually enter a trade earlier with a bigger rooms of liquidity grab or a smaller risk, and we can actually enter a trade earlier. But there's pro and cons when you use a smaller time frame, because the confirmation given by the smaller time frame might not enough to give a clear directions of the price. Now, what I don't suggest for any beginners is to use 1 minute time frame right here, because 1 minute time frame, there's too many noises and the confirmation given is not enough for you to trade. Now, a huge mistake right here if you are using the 5 minute and 15 minute for entry, but you are looking at the 4 hours and daily time frame for a stop loss, which means that you are having a super huge stop loss based on the higher time frame, but you are entering on 5 and 15 minute for entry and taking profit based on the smaller time frame and a huge loss on a bigger time frame, which make no sense for all stage of traders. So now this is how I actually utilize time frame right here: daily, weekly for analysis. And if I'm taking an intraday trade, I will go to 1 hour or 30 minute time frame for an entry. So if I'm scalping on specific time, then my favorite time frame for taking an entry is gonna be 5 minute or 15 minute time frame. All the time frame combined is kind of like a storyline that is trying to tell you where the directions of the price is going outside from the fundamentals, alright, because we are looking at technicals right now. So daily consists of 6 4-hour time frame, and 4-hour time frame consists of 4 1-hour time frame, and 1-hour time frame consists of 2 30-minute time frame, so on and so on. So it's all actually related, that if we can really see it in a whole storyline instead of just focus on one exact time frame, right, which sometimes is gonna give you no clue on what is the daily directions going, and you might ended up just because of looking on 5 minute time frame that you see some sort of confirmations or some sort of patterns, and you are taking on the short, but the daily bias was still bullish. So if we look into different time frames and then we set up time frames for analysis and we set up time frame for entry, it's gonna be more systematic towards your strategy and more structural in terms of taking an entry. So that's about it for today's video. I hope you enjoyed it, and comment down, let me know what is the next video you would like to see.